Bitcoin is facing its biggest challenge in over a year. So let's jump in and take a look at what is going on. And the big debate is, has the bottom been put in on Bitcoin? Are we off into a new bull market? So that's two different questions, two different points, and we'll talk about both of those. But here's something that's never happened. So this is the weekly chart. This is Bitcoin on the weekly chart. The 50-week moving average is about to cross down over the 200-week moving average, the super death cross. Traditional markets are setting up for potentially the same thing. We made a video not too long ago. Let's take a look at NASDAQ. When the 50 and the 200 crossed, it hasn't happened many times in traditional market history, only a few times. And generally when it does, there's a collapse afterwards. When those moving averages drop, there's a collapse afterwards. It's never happened in Bitcoin's history because Bitcoin is a very young asset. It's only been around, very short time, since basically 2009 or 10. So going on about 13 years now. So will this happen? The closest it ever came was back here in 2014. Let's see, right here. So it came real close back here on 2015. I'm sorry. So that was November 2015. And the 50-week and the 200-week almost crossed. It averted that crash of the moving averages right there. And what happened? We had a parabolic move on the weekly during that time that avoided the cross. It was coming down sharp. This parabolic move moved the moving average to avoid that cross. And then the market went on for a rally from there. Let's look at it from the base of that 200-week moving average, about a 248% move. Of course, that was back when Bitcoin was $250, and that moved it up to 786. And then obviously the rest is history up into 2017, where it ultimately, that was the beginning of the bull run cycle after 2015 into 2017. Now, let's take a look at it here, because what am I talking about in terms of the biggest challenge that Bitcoin has faced since last year? And that is this 200-week moving average. So the last time Bitcoin came up against the 200-week moving average was right here for the first time, was July of 2022. So not quite a year, about 9 months ago, July 2022. Actually, it hit it for the first time right here. And July 2022. And through August before it finally rejected. And when that happened, let's take a look at what that price action did after that rejection. So when it popped up above that moving average and lost it, it ultimately dropped down about 38%. So let's take a look at something else that's kind of interesting. The 50-week moving average. So the last time Bitcoin came up against the 50-week moving average was back in March of 2022, so almost a year ago. And when it reached the 50-week, it popped up and then dropped and lost the 50-week. So what was that overall drop? That was about 63%. So you had a drop from the peak right here back in, that was August, of an overall 38%. And then the drop from March was, to that bottom point was 63%, but to the ultimate range low that we've seen was 67%. So will Bitcoin reject on the 200-week and drop another 37%, kind of like over here, maybe pop up above it and drop down below? Or will it make it all the way up to the 50-week, which is about 26,000? Maybe by the time it gets there, it'll be around 25,000, which would be right up in this range here. So will it reject there? These moving averages cross, maybe pop up a little bit and then drop maybe 63 to 67%. Is that what's in the cards? Well, unfortunately, nobody knows, and we won't know until we get there. But let's just take a look at what those numbers mean. I've got a trend line drawn down here. And what this is the low back in 2018, 2019. This is the COVID low, the closing, that is. And I'll show you that in a second. So I've connected those two trend lines and extrapolated that out. So let's see what these percentage drops look like. So let's just take it from the 200-week moving average and drop 37%, put you back around the range low, 15,000. If you drop it 63%, that puts it around $9,000. You go 67%, $8,000. So this trend line is moving up. as price kind of continues on. So this may take a week or two for this to play out. Could happen today, depending on what happens with the price. And this move that's happened here has been very, parabolic and unnatural in terms of the environment we're in. This is short covering, liquidations, and definite manipulation. You can see it in the on-chain data, how this is happening and where this price action is coming from. So this is definitely a manipulative move trying to suck people in for exit liquidity. So that can get out of hand real quick, and it can shoot up. I mean, I wouldn't be surprised if it shot up to 30,000 from here. The way this is kind of playing out, if they can suck enough people in. The question is this a bull market? We'll get to that in a second. So what's this trend line about right here? Let's take a look at it, and let's turn off the noise. We can even go to the daily right here and turn the noise off, meaning let's go to the line chart, and you can see that these are the closing lows of COVID. Maybe I got to drop this one down a little bit. There we go. The COVID low and back in 2018 bottom, drawing this line out to here. And if we kind of track price action, and let's say it does, pop up like we're talking about a little bit more, and then start to roll over, it's going to work its way. And if it bounced and hit that trend line, it could be anywhere from, $9, $10, $11,000, depending on how this move plays out. So let's go back on the weekly chart and take a look at it again. And when you look at price action, where it rejected right off of that 50 and rejected right off of that 200, popped up over it briefly and then rejected out, then it dropped down. And again, we looked at those moves being, let's just say it takes a few days and kind of from here. So that's 37%, that's 15,500 range, 36, 37%. And then if you go down 60%, that puts you right on that trend line of 9,600. And let's see what 67% looks like. If we draw this out about a week on the trend line, 60% is right in that 9,000, 10,000. 67 would be at that $7,000, $8,000 range. So the longer this kind of plays out and drags out, the further out on this trend line it can potentially get to. But this is the ultimate trend line macro bottom for Bitcoin over the last number of years. Could probably stretch this back out, maybe see where it hit. We're on the weekly here. And let's look at this on a monthly. Let's go ahead and bring the candles back and take a look at the monthly chart and see what all this looks like. Interesting thing here on the monthly is a perfect rejected on the 50-month right now. Of course, there's not a whole lot of price action history there, but Bitcoin has never gone below the 50-month because, of course, hasn't been in existence all that long. But right now, kind of rejecting right there. So we don't know what'll happen if it rejects from there. All we know is price history shows us the weekly, and then that major trend line. If we go back on the monthly, you can see where that major trend line is on the monthly here, kind of supporting that longer macro trend. Let's turn this off. That's interesting. Let's bring this line out. So I don't think, yeah, that doesn't really work out trying to connect it there on a monthly like that from a low back in 2017. But interesting price action there. So I just wanted to show you that real quick, stuff I'm looking at in the charts. This mega death cross coming right here, the rejection off the 50-week, 60-something% drop, rejection popped up over the 200-week, 30-something% rejection. So this is a critical line for Bitcoin to get over that 200-week moving average. That's always been support pretty much in the entire history of Bitcoin, only broke below it during the COVID low. So what you want to see is Bitcoin kind of continue up. Maybe it takes a couple pops and then bop up and kind of find support there. And then that could confirm a new bull market pattern for Bitcoin. Now, how likely is a new bull market? So let's talk about that for a second, because Bitcoin is a risk asset and it's tied closely to traditional markets because of liquidity. It's the liquidity that's flowing in and out of the markets. That's why it's tied to traditional market, because the investment funds, hedge funds, things like that. One of the interesting things that happened the other day is that the first pension fund to dip their toe into cryptocurrency and Bitcoin lost a $50 million investment due to the failure of the exchange or platform that invested the funds for them. So pension funds are going to be watching that. So you're not going to see life insurance companies, pension funds, or any sovereign wealth funds coming into the market anytime soon until there's regulation and safety mechanisms in place that they feel that their money is not going to just evaporate like it did and get locked up in a bankruptcy or something like that. So that is going to prohibit a lot of capital from entering the space. The Fed is still tightening. Interest rates are still high. All of the Fed members came out and said that they're going to continue to raise interest rates. They're going to continue to hold them high. The markets are not buying the Fed's narrative that they're going to get rates above 5% and keep them there to get inflation down. The labor market is still very sticky. So there's a lot of issues that the Fed have, but we're still in a tightening cycle. We're still in a financial tightening condition cycle. The Fed is still hiking 25, 50. We don't know. Either way it goes, the market doesn't have any of that priced in because the market thinks the Fed's going to start backing up. So that's where we're at right now from a liquidity cycle. If you're new to the channel, I have comments off because there's too many scams and spam bots and stuff like that. It's out of control. Even Facebook now, I have to block comments on Facebook because if I post something on Facebook, this video usually that I share, instantly hundreds of spam bot fake account comments pop up. So anyways, I'm going to keep those comments off until these companies can figure out how to eliminate that and or verify channels so that everybody gets a verification stamp some way. Like in YouTube, obviously your name is highlighted, but that's still not enough because people will copy the profile, reach out to other people, and it kind of fools them. So anyways, I've blocked all that to keep that from happening. And also my channel, check out the playlist. I've got playlists on everything that I talk about on this channel: entrepreneurship, real estate investing, real estate development, leadership, mindset, online entrepreneurship, sales, marketing, all kinds of different things. I got tons of playlists, but this channel is all about me sharing everything I know, everything I've learned over the last 30 years, starting companies, buying companies, building them up, selling them off, reinvesting those profits into real estate, into markets, into crypto, things like that I've been doing for the last 30 years. So that is what this channel is all about: entrepreneurship, investing, generating cash flow from businesses to invest in other assets so that you can not only grow your wealth, but protect it for generations to come. So I hope you're enjoying the content. I will see you on the next video.